Let's bring in Ryan Nauman now. He is a market strategist at Zephyr. Ryan, good to see you. And I want to start with the labor market because we got some good news this week. Today, we found out that unemployment claims fell to a new pandemic era low. Yesterday, we saw that private employers added nearly 700,000 employees last month. What are your expectations for that jobs report tomorrow, and how critical is it going to be for the markets?
Thank you so much for having me on. That's a great question. And we are, just like you said, we are seeing a lot of momentum right now in the labor market. And I expect that to continue tomorrow with the jobs report. One thing that I'm going to be focusing more on tomorrow is obviously the unemployment rate and the numbers there, but is the wage growth. The wage growth is really what I'm going to be focusing in on, because as we know, the Fed and inflation is really driving markets right now, and moving forward, it will continue that way. The wage growth is going to be a big contributor to whether inflation, how transitory or how temporary is inflation, and that wage growth is going to have a big say in that.
So, Ryan, obviously, as you mentioned, the labor market, but also the Fed being two huge things right now that investors are paying attention to. And the Fed has already come out and said that the reason that they continue to be so supportive right now to the economy, which, of course, the markets are absolutely loving, is because of that labor market. If we do see more strength tomorrow in some of these figures, what do you think that's going to be signaling down the road for the Fed and some of the moves that they're going to be making perhaps sooner than they originally indicated, at least when it comes to those rate hikes, but also in terms of tapering back those asset purchases?
That's a really great question. And, you know, the Fed has mentioned it, Powell's mentioned it a couple of times, that there is some uncertainty regarding the labor market moving forward. And I think that uncertainty, because, you know, we're still in unprecedented times right now. We still have, you know, I think the unemployment rate is still going to remain artificially high because of the issues out there. You know, people still are a little bit concerned that going back to work. There's people that still have childcare issues. There's still juiced up unemployment benefits. So with that being said, I think the unemployment rate will remain artificially high. But though, you know, Jerome Powell's mentioned it before that, you know, we've got a huge number of people that are entering retirement because of aging demographics. So that's going to play a role into it. So I think those uncertainties are going to allow the Fed to remain a little bit, you know, have more patience in the labor market and remain more accommodative moving forward.
Ryan, I want to talk to you about this IPO market, which is just off to the races. 2021 looking to be a record year for new stock offerings. We had the Chinese ride-hailing company Didi have a very successful IPO yesterday. Today, Krispy Kreme going public for the second time. Remember, it was a publicly traded company up until 2016, so it's returning to the market. I know they priced below the range, but the stock is up about 8% here, so they probably hit that sweet spot, pun intended. What's your outlook for the IPO market for this year, and what is it telling you about investor psyche?
You know, that's a great question. And investor psyche is very positive right now. Like we mentioned, you know, accommodative monetary policies. You have equity market that continues to reach new highs. It's, you know, it's a very similar to a Goldilocks market out there, and that's providing some optimism for the IPO market. I'm still a little bit more cautious. I'm really interested to see how Robinhood plays out here. I think there's going to be some volatility there. Like your previous guest mentioned, there's some concerns, regulatory concerns. Also, I would love to see what their second quarter financials look like after, you know, the whole, you know, a lot of day trading kind of slowed down. And once people get back to work, how's that going to affect Robinhood? So, you know, I think there is some optimism for the IPO market just because of investor sentiment is so high right now. But that could fade if, you know, once we get the Fed to tighten policies a little bit more.
So, Ryan, of course, we've had a good share of great economic data. We've had also a fair share of not so great economic data, and there's plenty of opportunities now. So what are you expecting for the second half of this year? And where do you think investors can really put some new money to work in this market?
Yeah, so I really think moving forward, we could get a good jobs report number, but with the economic data, I think we're going to start seeing it slow down here a little bit moving forward, and we're starting to see some of that in other areas. Parts of the housing market have slowed just because of high prices. You're starting to see, retail numbers, retail sales have slowed, and I think moving forward, you're going to start seeing a rollover here in economic data. But I still expect economic growth overall GDP to remain, well north of 6%, which is going to bode well for, the market. And moving forward, I really think this robust economic recovery is priced into markets. You're seeing high PE ratios at these levels for sentiment numbers. Usually markets are typically flat to negative moving forward for the next 6 months. And I think markets are going to be flat for the next 6 months. And because of that, there will be volatility. Liquidity is going to dry up a little bit when tapering starts. And with that liquidity drying up, there's going to be extra volatility. I like financials and energy. I like that rotation trade to pick up steam again, because I do think the yield curve is going to steepen here during the next 6 months, and that'll bode well for the rotation trade or financials or energy.
All right, Ryan Nauman, market strategist over at Zephyr. Good to see you today. Thanks for being with us.